The BRRRR Method, one of the most powerful real estate investment strategies that you can use as a real estate investor. And no, I'm not talking about freezing your butt off in the cold. It is a strategy that combines the elements of house flipping and real estate investing and turns it into something that is incredibly powerful for building your net worth and accelerating your real estate portfolio. And if you don't know who I am, my name is Mason Stepaniuk, and I help people generate wealth through real estate. And today I'm going to give you an entire overview of the BRRRR Method and how you can use it to invest in fixer-upper rental properties, how you can force appreciation and cash flow and use it to accelerate your real estate investment portfolio. So what is the BRRRR Method? Well, in short, BRRRR stands for buy, rehab, rent, refinance, and repeat. Okay, and it is really the process of finding and purchasing a distressed property, sometimes with other people's money, using those short-term funds to rehab and repair and renovate the property, and then put great tenants into it to start generating cash flow and paying off the mortgage. And then after 12 months, refinance it to pay off any lenders that you used or that you borrowed from to source the deal, and then use the remainder to fund the next investment. All right. So let's break this down a little bit further detail. So starting with the buy. All right. So right now we're going to find a distressed property, ideally in a upper scale trending neighborhood where people want to live and where we can find a good value. And again, we want to do our homework. We want to do all of the numbers and make sure that we are still going to be making a profit after the purchase of the property, the cost of the repairs, and then our ARV value is significantly higher than what the cost of the property and the repairs are going to be. Okay. We want to make sure that if we're going through the whole effort and we're forcing the appreciation on the property, that we're still making profits on the investment. All right. It's actually going to be really, really critical for the refinancing step as well. Next, we're going into rehab. All right. In rehab, we want to now take the property that we've just purchased, put some money into it and renovating the property, to find great tenants. And again, the property isn't going to do us well if we don't find a great tenant to rent it from us, right? And better properties attract better tenants, tenants that pay higher, tenants that pay on time. And we want to do that through the rehab process. All right. Next, we want to take our newly fixed up property and find great tenants to move them in so we can start generating cash flow and start paying off the mortgage to bring it into the next step, which is the refinance. But again, it's really, really important to have a good screening process in place, because the better tenant that you have, the better cash flow that you're going to make. And then next is the refinance. Okay, so now we take the property that we have renovated that now have good tenants in there paying the rent and generating cash flow, and we take it to a local bank or credit union, and they're going to do an appraisal. And then based on that appraisal, they will hand you a check of up to 80% of that appraised value. Okay. So they take the equity that you created, that you forced through all of the renovations that you did, and now you are getting a cash out of 80% of that appraised value. And you can take that to pay off all of the sources that you used, or the money that you borrowed. You pay off the lenders that you use to source the deal and to pay or to fund the deal. And then now you take the remainder and you go into the last and final step, which is repeat. So of the profits that you make, you can take that and use it to fund the next deal, and you just keep repeating that process. And every 12 months or so, you have a new property that is generating you cash flow, that is building you equity through the appreciation, and you start massively scaling up your real estate investment portfolio. So why is the BRRRR so cool and effective for investors? Well, it really just acts as a hybrid between flipping properties and renting them out, and it takes the benefits of both and reduces the risks of both at the same time. And you could really build instant equity through forcing the appreciation, and it ultimately adds to your net worth and gives you a property that is cash flowing, and you can sell at the peak when the market is at its peak, right? And since it is a better house or a better unit, you're going to be attracting a better type of tenant, one that pays on time or pays more. And because you've already done all of the repairs, your capital expenditures are going to be a lot less because, again, the repairs have been done already. Now, the BRRRR really takes advantage of the long-term capital gains, and you ultimately end up paying less taxes on it as well than if you were to flip a property within a month or two, right? They fall under different tax allocations. And lastly, the BRRRR allows you to purchase more real estate without using much of your own money because you're using either a bank or a private lender to fund the deal. And then you can use the long-term mortgage to pay off that private lender once it's refinanced. And really, you can use the BRRRR on any type of property. You can do it on single family homes. You can do it on townhouses, condos, whatever you want. You can even do it on commercial type properties, right? However, as with any investment, there are going to be some associated risks. Like what if you can't get the refinance, or what if you do the numbers wrong, or what if the bank doesn't appraise the property as high as you thought that they would, or what if the repairs end up costing way more than you originally estimated? These are all things that could come up. And just like anything, right, there are always going to be risks, but you can mitigate these risks by doing your due diligence, doing your homework, and by consulting with other people that have done the BRRRR strategy. So again, that is the BRRRR in a nutshell. And I wish you all of the best on your future BRRRR deals. And if you want more tips like this to help you grow your real estate portfolio or to just generally generate wealth through real estate, I implore you to smash that subscribe button so you can be the first to know about more videos like this. Again, my name is Mason Stepaniuk. Thank you for watching, and we'll see you on the next video.